Record. Recording in progress. Hello, guys. This is your boy HOUTX Trader Nick, and also on the grams is Big Tuna. Hey, guys, we're going to be looking over the market. We're going to do gold. We're going to do dirty 30. We're going to do nasty Nas. And this is only for training. This is not financial advice. If you need financial advice, please go see a professional. This is just for training. All right, here we go. Goldie, guys. Goldie, Goldie, Goldie. The other day, we said that we were wanting this to break and then give us a retest. Unfortunately, we did not get that retest. But here's a special thing, guys. If you come back out to the 2 hour, I know that we were, like I said yesterday, we were in here and we were trying to catch these super duper sniper entries and all this BS. And I got topped out of the first one because even the best traders sometimes get too zoned in, get too focused, and sometimes you need to get smacked upside the head and say, "Stupid." You need to back out a little bit. You need to look at different time frames. You need to readjust and get your head straight. And that loss told me that, and I failed to look at the bigger picture, which is right here in front of me. This is the fib. Okay, let me draw it out for you guys. If you're just now watching this video for the first time, from the top for the bottom, there's the fib that we were working in. So why would I be risking a 1 or 2% in this little bitty area that's super insignificant when I should have been risking 1 or 2% on this fib from here? If we're buying and I was at the 88.6, this right here should be 1% or 2%, not the little bitty pips that are right inside there, guys. So this is what we talked about yesterday. I'm an idiot. I took an L because I shouldn't have been trading yesterday, because let's think about the most important thing as a trader is to follow our strategies. And for me, if I'm going to trade in the morning, I must have the night before went through the charts and have a plan and marked up my charts, give myself a plan A and a plan B. So in the morning, I don't have to make these decisions. They're already made. I react to the market instead of planning out the entire thing. And I'm guessing that's why I made a bad decision yesterday and I took that L. It did smack me. I did recuperate. I did sit back and say, look, that's not the right fib. I should be looking at this big fib in the bigger picture as opposed to this little bitty dinky nothing here during a consolidation zone. So guess what, guys? I pulled the trigger. All right. I realized it as soon as I did it. I said, let's zoom out. Hey, look, I'm still at the 88. I'm still oversold on multiple time frames. Why am I not in this trade? Dummy. And so I got back in the trade and I'm in profit now. I think I'm in it like literally right at the red line. So like 1980 something. And yeah, we're up 200 points, 200 pips, whatever it is. But we're already in this trade. So there's not a whole lot we can do now except for manage the trade. And again, if you guys know my strategy, I'll just review it real quick for you guys. 170 something pips as we are now. Okay, guys, this is the strategy. Let me just delete this fib for now. But okay, look, before I delete the fib, see the sell zone up here? Know that the sell zone is in that fib on the sell side. All right, so let's just delete this. Clear this up. I don't really care about the trend line. I don't care about any of this stuff, really. So let's look at this. Here's the move from the bottom to the top. Okay, that's the fib that we're working inside of. This fib. That's the bigger overall fib. What do we like to see when we play our strategy? I want to see liquidity, all these bottoms, this wick, this wick, this wick, this wick. I want to see that all get smashed and all that money be taken from all these people who are buying. These people have their stop losses, they have their break evens, they have all that in here. I want the market to come down, hit all of that, get into my bigger fib, which this is, like I showed you. There's a 78, 88.6 area. That's an area. That's where we start to pay attention. This is when the hairs in the back of our neck stand up, and now we're zoned in. Okay. So I saw the 88 get hit. We see the divergence. We see the oversold on the RSI. We pull the trigger. We put our stop loss down here at 10% of the overall move, and we had zero drawdown. Maybe a couple pips right here. But that is the strategy, guys. Fib it. Wait for liquidity to get taken. Find your zone. Wait for the RSI for confirmation. Pull the trigger. And that's what I did, and it worked. And it is currently working. I just protected. So therefore, it's a winning trade because it's free, right? I could definitely take partials right now if I wanted, but I'm going to hold for a little bit more. And it is what it is. So that is the strategy. So what happens now if you're not in this trade? It's okay. There's a very, very good chance we're going to have a retest and a reentry because this is now the first leg. This would be the consolidation zone. Let me delete this and delete this. This would be the order block, okay, that led to this buy off right there. Okay. So there's a very strong chance that this is going to retest and then keep pushing up for the second leg. Okay. And maybe even a third leg before it really starts to turn around. Now, once it does this third leg, we don't know what it's going to do from there. It could do a small third, a small three, and then a continuation, which would be what, guys? A bull flag, right? They would call that a flag move. If you look at the flag pole and then the flag, and then it pops off, right? That could be a flag. It could not do that. This could be a bear flag where this would be the flagpole. This upward would be, and this is getting drawings are getting crazy, but then it would go down. So let me just undo all this crap because it's just too much. Okay. So we're looking for a 1, 2, 3 up. Okay. Once it gets there, like I was saying, this could be the flag. So you guys are familiar with bulls and bear flags. This would be a bear. There's the flag and then a break. So we can't anticipate that far ahead, but what we can do is try to get in on this trade as it pushes up. So what are we going to do? We're going to fib from bottom to top. We're going to wait for a pullback, and then we're going to take the long. Okay. So what does that look like? Let's come in. Let's reset the chart. Baby, there we go. Let's reset it. Big bad boy. Come on. There we go. There we go. I got sweet talk it. Okay. So this isn't quite as clear as it was on the previous chart, but this is the consolidation area that I have marked up right here, right? That's the area that consolidated before it broke. So let me just make it a little bit prettier. Right here, and maybe we can shrink it down a little bit. That's the area. So we have a couple ways of thinking about this. And this is going to depend on your risk management and the strength of the RSI. So we have a couple of different ways we could enter. We could fib this from here to here. And let's just assume this is the top.
Look
It's not
at
going to move.
Island's new spy card, Fulton.
Let's assume that's the top and it's not going to move. Then what are we going to see? We're going to see this wick down here. We're going to see this wick here. We could get a 61.8 entry. All right. This is going to depend on the RSI and us coming down to a smaller time frame. That could very well be the entry right there. Now, it could not be. So I'm not saying that you should put your stop loss at the 78.6 because really this could be the other entry is right in this area. You would want these two bottoms here to get cleared out, and then you would try to find the entry right there. So it's kind of sketch. Perhaps on this first entry, we enter like a half position. So we're not over leveraged and we put our stop loss there. And at least we're in the trade in case it does pop. And if we do get a deeper retracement to here, we still have enough ammunition to pop that other entry right there. So this could be one of those situations. Okay. You don't know. You don't know. A 61.8 is always risky, but honestly, it's a structural area. It's a resistance that broke. We could see it retest as support. And also, if you look, what does our strategy say? We need to have liquidity taken out. Look at these wicks. Strong wick into a strong bull. Wick into a good bull. That means there's a lot of money that got put in here. So it's not inconceivable that this market is going to come down, wick these two, find this as support, and go. So we have this bigger fib, but also, guys, look at this. What if we just did this? This is the last move that pushed off, right? And there's a push down. So again, we like Elliott waves. So if we use this fib, and perhaps we'll stack the fibs, but just give me a minute. First push, we could be looking for a second push, you know, we don't know. We don't know yet. But we're just getting our mindset for the possibility. We have a 1, 2, 3, and then a go. All right. We have a 1, 2, 3, and a go. And then if you also think about that same type of thinking, we had a 1 broke strategy. We have a 2 Perhaps that's the third, but we're really looking for a third, right? And in which case, we use the same fib as here as our second leg, and we start taking TPs up in here at our extensions, which is what? The support resistance of this or the 61.8, which is the order block from here. So again, we're going to have to make these determinations when we get there, but at least we see them ahead of time. Okay. We're going to react. We're not going to plan. We're going to plan now. We're going to react when it happens. So let's just think about that. There is a potential entry for here at the 78.6 on this fib, which makes a lot of sense because that is the previous resistance area. That would be resistance turning into support. Also, it would be the liquidity being broken. So that's our first bullet right there, 1994. We will save another bullet for this bigger fib here, which would be in this area, the 1988, 1990 area. I don't know exactly where. Again, we'll have to look at the RSI and perhaps structure and internal breaker structure and things of that nature before we can make that determination. Just, I'm not going to mark them on here. I'm just going to leave the chart like this, but just know we're looking for buys in two spots, either there or there. We can make that determination when it happens, but really that's the only thing for us to do. That would be plan A. Plan B then would be to wait for it to come up here and we'd sell off. So if the market pushes from here, we can only have plan B, which is selling from up there. But right now, I would rather buy before we get into the sales. All right. Goldie. Let's look at dirty 30. Dirty 30 did what, guys? It did not do down. It went up. Look at the charts. We already have this planned up. I know that people in the group are in these cells. They are 100% not wrong for being in these cells. And congratulations, I was fishing today. I didn't hit the cells. So as we say, look, there's the TP. There's a 61.8 TP. If you took the 61.8 as a TP, right, you're in a very small amount of pips drawdown. So let's delete this now because this is gone. And for some reason, this went into full screen mode. I don't know why. There we go. And where's that fib? Okay, we have the buy up fib, which we see is a 61.8 right there. But where's the buy down fib? Bingo. Right in our zone. Right, guys? Right in our zone. What did we say? There's a sell zone. There it is. Okay, there it is. We are over on the 1 hour. We are way overbought in the situation. For some reason, I always say oversold, but it's not. It's actually overbought. We're very close to the trend line. If we come down to the smaller time frames, do we have any sort of divergence? Not on the 30-minute. We're not there in the 30-minute, but I mean, this is kind of a half-assed divergence, but it's way over here, so I don't really like that. I like looking at this area, and it's not really divergent on 15 either. So we did not have divergence, which is okay. We still had our fib. We still had the RSI oversold. Again, this is not only a fib, but it's also the breaker block. This not breaker block, the order block that led to this sell-off. So if you think about it this way, look at this group of candles right here. It came down, it came up. There's buys or sells, there's knickknacks, there's whatever. Well, pawn shop of trades in here before it tanked, right? That would be the order block. This is where it's going back and forth collecting orders that led to that. So this is the area of interest there, which is also in our fib zone, which is again also all result of the RSI. So if you're in the dirty 30 trade, congratulations. If you're not in the dirty 30 trade, all has not failed. Do yourself a favor, wait for this to come down, measure a pullback, and then jump in the trade. You will have a smaller stop loss and a higher percentage if you do that. What I would then suggest then, if we come down to the 15-minute or the much smaller time frames, perhaps the 15 or the 5, what we kind of want to see is internal break of structure. And to be honest with you, that would be not the best in the world, but it would be like right here. You see how those are the lows, and then it came up and then it broke. It's not the cleanest break of structure, because honestly, the cleanest break of structure would be like down in here somewhere. So, it with such an aggressive move, it didn't really give us a break of structure. So, what we're gonna have to do is wait for this to come down. I'm gonna delete that. I'm gonna delete all this just so we can clear up our vision here. What we really want to do then is to fib that from the top to wherever the bottom is. I don't know. Let's just say it's right here in the moving average there, and then we'll try to jump in a sell in this area with a stop loss like this. That should be the top, and then we will come out for a TP. And again, if we're going to get into sells, where the buyer's sitting. All right. So if I was not in this trade and if I was a buyer, I would be looking to buy after this got broke. Right. So if I was here and I was buying, right, where would our zone be? Our zone would be down here, which is right below this. So I would be expecting this price to come around and do some BS and consolidate, do whatever, but eventually take out that wick right there. So the TP for this trade needs to be down here. I'm not saying you don't take partials because obviously if you get here to the 50%, which is this wick here, you'd want to take some partials because it could turn around and then smash it. You don't know what it's going to do, but you can at least have a better overall goal for your runners, or take a half and leave the other half running like a strong runner to get down to the ultimate TP. So let's just clear all this up because that's not what we're looking at right now. That's planning ahead. Right now, this is what we're looking at. We're in our sell zone. We have a break. It is reacting. Let's just measure that pullback. And perhaps we come down even to like the smaller, like the 5 or the 3 minute. And yeah, you mean see how this is kind of structured right here? See that? I mean, it's not like the prettiest in the world, but that is it. I mean, you had a low there. You had these lows here. So I mean, when I talk about structure, like this is structure, right? These are the lows, and then I'm just use the paintbrush. It's easier. Look, high, 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 high. That's the low before it hit this high, and then it broke. So it broke internal structure. All the trend line guys out here are just like, oh, it broke trend line, dummy. Yeah, I know. I can see that too. Right? So it broke trend line. It broke highs, lows. All right. So it did break internal structure. So let's just measure that pullback and jump in those cells. I'm not in those cells, but tomorrow, if it gives me a pullback entry, I will be. All right. So wherever this fib lands, measure the fib. Take your shot in our area up here. And of course, your stop loss is always 10%, wherever that may be. I don't know yet. So plan accordingly. Tomorrow, when you wake up, look at the market and go from there. I'm expecting NAS to be the same because I'm pretty sure they look the same, and I'm wrong. Let me see. Let's see what's going on here. Okay, so our plan A and B, again, our plan A, which was the push down, never got hit. It just kept on going, which is all good. We had our markup to sell, which is in this zone, and it's not there yet. Do we have a full Elliott wave? That's kind of like a half-ass Elliott wave. The first wave, let's go to the hour and see if we can't find some fibs to see if this thing is done. I don't think it's done pushing. I don't think it's done pushing just by looking at it. First push down. It's a weak second push because of this consolidation and down. I mean, so perhaps we could say that this is the second leg. And it still hasn't. Look, okay, if that's the second leg, guys, again, you can't make this shit up. It just lines up all the time. If that's the second leg, which is that second push, the TP from there is the bottom of our 78.6, which is the bottom of our zone, which is this right next to this kissing candle, which is the breaker block. I mean, there's a lot of things going on right here in this area. So I'm going to draw another box of a different color. Look at this. Look at this area. We have from here, we have this 236, we have that 236, and that 786, which is also the resistance support of our order block from over here. If I had to take a guess and I had to bet money, which is what I do, I would guess the entry would be right there at 179.42. Now, I might be off by a little bit, which is all good, but I'm guessing this market is not done. So let's see if we can't get a push tomorrow on the nasty Nas, in which case we will be selling. Again, your stop losses got to be up here in this bigger TP. Unfortunately, guys, for now we can't do one of these sniper entries just yet. So if that's too many pips for you, then just plan accordingly. Don't over risk. Don't over leverage. Your TP1 then would be at the bottom of this wick because this wick needs to get taken. And actually, I'm gonna change that. It needs to be right here. The TP, because if you think about where a buyer's sitting, right? If this is liquidity, buyers will be sitting right there. So let's let this get taken out. Let me delete this. So our plan is now up, down, clear this liquidity to here, TP1 it there. Because then you don't know what it's going to do after that. It could turn around and set a new high. It could break this trend line and tank. You don't know, but let's at least take profit after it takes us liquidity and right before this these wicks, because it could use that as support and turn around. The fibs match up for buyers to be sitting right there after that. So conversely, you know, if for some reason we don't get wicked in here, then what? Our plan B would then be to buy there and to finish off this trade. Right? We're getting a little riskier because we're getting a little higher in the Elliott wave, but we would be buying there, and of course our TP1 would be on that side. So there's our plan A and plan B. Right? Sell right there, take it to here, and TP1 it, or buy here, TP1. It's the exact same thing on the flip side, on the opposite. All right. I hope you guys followed all that. I'm talking a little fast because I'm tired. I'm gonna get the hell out of here. Woo! Marathon. You guys have any questions on that? No questions. Not a single one. Rube, Colton, Wayne, D. Anybody? Thank you guys again for being here. I appreciate y'all stopping by on a late Thursday night.
Not too bad.
Any of you guys smash any trades today? Any of y'all in that US 30 short?
I didn't take anything.
I'm in the US 30.
Wayne's in 30.
Took
What's
the
up,
US
Wayne?
30. I took a 30 long and short.
Long. That's crazy. Okay.
Yeah.
And then what about the
So
gold?
it's pretty all right.
Did you guys get the gold buys down here at the 88?
Yeah, I'm still in
No.
that one too.
Rube, there we go, Rube. Good job, guys. Just remember, hey man, if your confidence is shaken, all right, and you've been getting your ass kicked, and you're not sure about the strategy, and you're figuring stuff out, don't take full positions, man. Take half lots, take half whatever your normal size is. Risk $5, risk 10. It doesn't matter, and then just say, okay, look, dude, now let's just under leverage, so you take away all the stress. Take half positions, and then start working on it. You don't have to go full 1-2% on every trade and get your ass kicked. All right. So build your confidence and ask questions, and we'll work together. And thank you guys for showing up, because if y'all show up, I show up, and it only helps me as well. Right. So tomorrow morning, I'll jump on in the morning. I haven't, dude, I've been so busy. I haven't checked news. I don't know what the hell's happening tomorrow. It could be a Fed speech tomorrow. I have no idea. And then I'm not going to be able to trade super long into the morning after market opens. I got to take my kid to school. But besides that, I'll throw up a link tomorrow. We'll probably go live tomorrow on YouTube's and trade you in that for the first time in a week. And yeah, thank you guys for stopping by. This is only a training game. It's not financial advice. If you guys have any questions, please put in the chat. Please hit me up on YouTube. Thank y'all for subscribing and all that good stuff. Y'all have a good night, guys.
All right, man. See you.
Thanks,
all right,
Nick.
all right.
Have a good night.
Deuce, y'all take it easy.